Alright, UWMC went up a whopping 20.06% in one day thanks to their earnings report. The company is still paying an 11% dividend per year, and the company just became the #1 mortgage originator in the United States. Those are some pretty insane feats. And even after a 20% uptake in one day, I still believe this company to be undervalued. In fact, I have never been more confident in the future of this company as I am today after interpreting their Q3 earnings report. So let me explain why I believe UWMC is a tremendous value on the stock market, especially after this insane third quarter. The backstory. According to my interpretation of one-up on Wall Street, Peter Lynch likes to think of companies as stories. So today I will be telling you the story of UWMC as I see it. First, context. UWMC is a wholesale mortgage originator, meaning they sell mortgages indirectly to both house buyers and refinances. And I say indirectly because UWMC employs a middleman, a broker, and this broker is actually the one that originates the loans. I have done a way more in-depth explanation in my overview video of UWMC, so the link to that video can be found in the top right corner. Anyways, all you need to know for now is that UWMC earns money by selling mortgages, and that they do this through a middleman. And in fact, this company is really good at what they do. They are on average almost twice as fast in closing loans as their competition, and they are one of the lowest cost mortgage providers in the US. Historically, the company has averaged with margins in the neighborhood of about 100 basis points. 100 basis points just means 1% of every loan. 1% of every single mortgage that UWMC originates goes straight into the revenues of this company. This figure is actually super competitive. This is one of the highest margins by far you'll find on the block. But I did say historically because this figure has changed significantly this quarter. In fact, it has gone down all the way to just 52 basis points now. I am teasing you guys pretty hard here, but I will explain why these lower margins are actually a good thing in just a bit. Anyways, a mortgage originator in the current economic environment where interest rates are skyrocketing to levels we haven't seen in over a decade, well, that is a painful environment to be selling mortgages in. And thanks to this tough economic environment, the amount of people selling houses has decreased significantly during this recent period. So the revenues that are going towards UWMC have also decreased significantly. We can easily see that in this table where just 1 year ago, the company did almost twice as much in revenue as they are doing today. So 2 + 2 is 4 minus 1, that's 3 quick maths. That should mean that the earnings of UWMC have also decreased significantly. Here we can see that on earnings basis, this company is actually flat year over year, while the revenues have decreased by 50% over that same period. I cannot say anything, but that is some really impressive stuff. Keep in mind people, earnings remain flat while revenues are down 50%, and their total gain margin is also down 50%. Again, I am teasing you guys with these margins, so please remain patient for just a while longer. And the main reason for their earnings to remain flat is this: mortgage servicing rights. You can think of this as a natural hedge built into a mortgage origination company. Whenever the company sells a mortgage, they get these rights, and as rates increase, these rights gain in value. So UWMC is actually hedged for bad economic environments just from how they operate their business. That is pretty darn dope. Moreover, this is pretty darn cool too. They actually earn an interest on these MSRs. So not only are they a hedge for bad economic times, they also earn UWMC at 3.44% interest on about $306 billion on mortgages. That is a lot of freaking revenue, about $10 billion per year at this moment in time. Okay, so that is plus or minus the backstory of UWMC. We have a wholesale mortgage company facing tough economic times. But thanks to their business model and thanks to their amazing performance recently, they are actually still profitable even during these tough economic environments. Besides, the company has been paying a 10-cent dividend every single quarter for 8 consecutive quarters. And at the current share price, that is about an 11% dividend yield on your investment. But this is all just the first part of the company's story. There is also the story going forward. UWMC has employed a big PP energy strategy called Game On. This strategy is what has allowed UWMC to come in as not just the #1 wholesale mortgage company, not just the #1 in purchase mortgages, no, they have become the freaking #1 mortgage originator in the entire US of A. That is a pretty darn impressive feat. Really impressive. Remember that decrease from 100 to 52 basis points that I've been teasing you guys about for the entire video already? Well, this company has achieved that insane milestone of becoming the #1 mortgage originator in the US through slashing their margins in half. That is their Game On strategy, lowering their own margins, offering the cheapest mortgages on the block, pushing any mortgage originator to either innovate, lower costs, or die off. And according to the CEO himself, Matt Ishbia, some wholesale mortgage originators have actually started to die off already. It seems that this Game On strategy is working really darn well. In fact, during this quarter, according to the CEO, about 17,000 loan officers have been added to the broker channel and about 12,000 loan officers have been converted to work indirectly for UWMC. That is some pretty insane growth for the broker channel. Thanks to mortgage brokers becoming more competitive, UWMC has become the biggest mortgage player out there. Now, one of the analysts on the earnings call actually had some concerns regarding the stickiness of all this growth. Will this new gained market share actually stick around when UWMC eventually decides to go back to normal margins? And surprisingly, the CEO actually answered that this company did something very similar back in 2019. And back then, all these new mortgage brokers that did sign up with UWMC were actually super sticky even after they increased the margins back to normal levels. Fun fact, Matt Ishbia has stated that he expects UWMC to have about a 40 to 50% market share in the wholesale market during this third quarter. And that means that UWMC literally sets the prices for the entire market. If they decide to lower their margins, everyone will have to follow. If they decide to go back to 100 basis points as margins, everyone will also have to follow. So even though the company is guiding for margins in the neighborhood of 40 to 70 basis points in Q4 of this year, at some point the company will go back to that 100 basis points figure. Just imagine how profitable this company will be then. Just imagine how juicy the dividend will be then. Until then, we should be looking at a profitable company, either through 1, their own insane low cost and therefore high margins, or 2, because their mortgage servicing rights continue to increase in value. I do want to emphasize that this company is right now trading at a 12-month trailing price to earnings ratio of roughly 4. And if we take significantly more conservative numbers for the entirety of 2022, then this company will at maximum be trading for a price to earnings ratio of 7.5. That is undeniably low, especially for the biggest mortgage originator in the country. For a company growing explosively behind the scenes. For a company that is ready to dominate whenever the real estate market turns around. Because bet your ass that this company will be ready whenever that happens. The CEO has proven time and time again that he truly has a long-term vision. As a reference, Matt owns roughly 70% of this company, and his family owns roughly 90% of this company. So he is just as focused on increasing the long-term value of this business as we investors should be. What he has stated when this company went public back in early 2021, that 1, this company would become the biggest mortgage originator in the US, and 2, that it would thrive in rising interest rate environments. That has happened. And now this same man is saying we are in a great position to dominate. He has reiterated that he isn't sure whether this will happen in 2024, 2025, 2026, but the main point being, I believe he is a man of his word. I believe UWMC's time will come. And until then, I will be earning roughly a 12% dividend yield on my initial investment. Now, to be completely fair, until then it will be a very bumpy ride. If the US real estate market decides to tank even further, we could expect earnings of UWMC to actually drop into the negative. But the company does have access to $2.9 billion in liquidity, more than they've ever had, including an $800 million cash position. If I were a betting man, I would bet they will be fine. This is a classic situation of heads I win big and tails I don't lose a lot. But then again, I ain't no financial advisor yet, and this video certainly isn't financial advice. In fact, you should be aware that I hold a position of roughly 10% of my portfolio in UWMC. So please do take all my opinions with a huge grain of salt. Remember, until I finish my financial advisor training, I will only be able to give you my opinions and some funny ass memes. And even when I do become a fully permitted financial advisor, I will only be able to give you one-on-one advice. If that interests you, please do keep your eyes open for that service reasonably soon. And with that said, thank you so much for watching. I love you all. Peace.